happy to show everyone. So I believe everyone should be able to see the presentation that we have, so happy to flip through. And as you have questions, certainly feel free to, actually, I just realized I can't see it when I run it this way, but please type in questions as you have them, and I'll certainly like to answer them at the end after the presentation. So first off, what is Bitcoin mining for those of us who don't know? So Bitcoin mining is basically a decentralized computational process of verifying transactions on the Bitcoin network and then adding them to the blockchain ledger. What it does is it ensures the security and integrity of transactions and prevents double spending. It introduces new Bitcoins into the system. That's how we get effectively paid as a miner. And we, of course, circulate those Bitcoins out, and that's how you get them in your own wallets or through your ETFs or through Michael Saylor's MicroStrategy, if you so invested in that. And what we do now is we use specialized hardware to solve these complex mathematical problems. And what we're doing is we're validating blocks of the transactions with these specialized machines. And I just note that Brittany Kaiser, our great chair, has just joined. Hi, Brittany.
Good day, everyone. It's a pleasure to be here, and thank you so much for having me, Coinstack team.
Just to orient you, Brittany, we're just going through the presentation quickly and then answering questions at the end. So sit tight for a bit, I guess, and feel free to jump in if you have any comments. But first, talking about the Bitcoin mining. So next slide here is, this is just how Bitcoin mining works for those who are not familiar. What we do is we're doing transaction verification. So what we're doing is we're collecting the transactions from a pool, and then we're just placing them all into a block. And what we use to secure the network is what's called proof of work. And what we do is we're solving a cryptographic puzzle. It's called proof of work, and in order to add it on the blockchain. And once the puzzle is solved, the blockchain is added to the blockchain, and us as miners are rewarded with newly minted Bitcoins and transaction fees. We do use specialized equipment to do this. It's not as if you could be doing it through a laptop anymore. The industry has advanced to a point where we actually need specialized machines. Like, I guess you could mine with your laptop, but the computational power of a laptop is so weak nowadays that you're very unlikely to be able to win much, if any, Bitcoin. Whereas those of us with these crazy machines that we now use are throwing in millions of computational answers into the blockchain at the same time. So let's talk a little bit about Gryphon because of our place in it. So our mission statement really is to create a financially nimble, highly profitable, and environmentally responsible Bitcoin miner. Usually people kind of gloss through this opening statement, but the reason why I highlight it is that we've been in operations for about 3 years now as a private company, and recently in February became public. But during that 3-year period, we believe we've been actually nailing this statement, and I'm happy to show that in the next few slides. So first off, let's talk about Gryphon as a company. We're trying to create an industry leader in Bitcoin mining, and we generally look at it in these 3 silos. First off, size and scale. Left-hand side, we currently operate 0.91 exahash of self-mining. It's actually a touch higher because we've recently added a few more machines. And in January, February of this year, we generated revenues of approximately 4.4 million. Based off of an average price of Bitcoin at 46,281. As we all know, Bitcoin's now at 60,000, so the revenue numbers are getting even better on that basis, given the price of Bitcoin moving up. We are a low-cost operator, and we believe we're among the lowest-cost operators in the space. As you can see there on the slide, for all of 2023, our break-even cost was 18,217 per Bitcoin, which is very competitive. And those of you who are thinking, well, what about the halvening? Post-halvening, you basically were effectively doubling this number if you're using 2023 data. So theoretically, based on that, it'll be 36,000 and change would be our cost of buying Bitcoin based on 2023 numbers, of course. And as I just mentioned, Bitcoins are at 60. So our margins are pretty nice. In the middle is a leadership team. Most people will, actually, if you talk to any management team, they're always going to say they have great leadership. But I really do think the proof is in the pudding with us, both on paper and in execution. So first off, about me, I'm the CEO and director, and also recently president of Gryphon. I was the former CFO of Riot Blockchain, which is the first publicly listed Bitcoin miner on the NASDAQ. And I was also managing director, head of metals and mining at Cantor Fitzgerald. So I do have a commodity background covering commodities. I do have a commodity background, which is very relevant because I treat Bitcoin as a commodity, and we've been running Gryphon as a commodity company, looking at low costs and whatnot. And we certainly have been showing that, and I'll mention that in a little bit. I also, as a side note, did some consulting work with another publicly listed company called Hive. So I'm one of the few executives that's actually been in a senior position for 2, now 3 publicly listed Bitcoin miners. My CFO, Sim Salzman, was also the former CFO of Marathon. So if you take a step back, you have the two CFOs of the two largest publicly traded Bitcoin miners for quite a while now running Gryphon. And as such, we're very numbers focused. And that's the reason why Gryphon's numbers look the way they do. And we're actually, as a joke, accumulating CFOs of the top Bitcoin miners as well. Our chief technical advisor is Chris Ency, who was with me at Riot as our chief operating officer and interim CEO at a time. And so we've basically rebuilt the band from the two larger companies into Gryphon. And of course, Brittany here, she's a globally renowned expert in blockchain technology and digital assets. I'll certainly give you a chance to talk about yourself, Brittany, because you have a very impressive resume. I'll do that in the people slide that's coming up soon. But just to finish off the third part of this, there's the ESG standpoint. We're independently certified as 100% renewable. We were one of the inaugural recipients of what's called the Green Proofs for Bitcoin certification. Very happy, very proud to be part of that. And we are also one of the first groups, actually the first group, to publicly disclose our carbon emissions for 2022 and 2023. We did that last month. And I believe we're the first and only so far to have a full disclosure of our carbon emissions. And we're very proud to lead the way in terms of transparency in carbon emissions. We are 100% renewable, and that's very important to note. We are not doing any financial gymnastics in order to become carbon neutral. Our power for Scope 1 and Scope 2 emissions is entirely hydro. And so we're pretty much as clean as can be from those two standpoints. But if you're willing to do the math a certain way, we're technically actually carbon negative. Reason being is that we own carbon offset credits that we don't need for Scope 1 and Scope 2, which is what everyone else is trying to get to zero on. And what we're doing is we're using those to offset our Scope 3 emissions. So now we're talking down the supply chain in terms of when machines get delivered to us, we're offsetting the carbon emissions from that. And also when we travel around to different conferences, we're also offsetting the airfare, for example, or the air emissions that we're doing. So we're going to that level, which we don't believe many others, if any, are actually doing. So talking about the team, I've pretty much stolen the thunder from this slide about the management, so I will skip forward. And this will be a great opportunity for Brittany to introduce herself because she's frankly very impressive. So please, Brittany.
Good day, everyone. My name is Brittany Kaiser, and I'm pleased to be chair of the board of Gryphon Digital Mining. I joined the company at the end of 2020 and have had the incredible opportunity to work with Rob on growing this company. Before I joined Gryphon, I got into Bitcoin in 2011 and went full-time into the digital asset industry in 2017 when I moved to the state of Wyoming and joined multiple US congressional subcommittees on blockchain, fintech, and digital innovation. I've helped write and pass now over 40 laws. I think this says 22. Oh, wow. Now over 40 laws on blockchain, fintech, and digital innovation in the United States. Firstly, for the state of Wyoming, and those have now been adopted in over 20 other states and more than 30 countries around the world. So I spend a lot of time traveling around and doing legislator and regulator education on digital asset policy. I also do private briefings for Fortune 500 board of directors to teach them about digital assets and how to integrate that into their strategy. And after once I felt like our work was impactful enough where we had achieved regulatory clarity on Bitcoin, I got to meet Rob and plenty of other fine folks in this industry and start a new and very intentional ESG focused Bitcoin miner in order to be one of the leaders in the industry that could be regulatorily compliant, regardless of any sort of legislative blocks that might come in for miners that are using fossil fuels, since we do not.
And I will definitely update to 40 because that's a big jump. Congratulations. That's impressive.
Thank you.
Briefly talking about the company history, this is big, so I'm not going to go through every one because that'll take us till tomorrow. But let's highlight a few things to talk about the history. It's in 3 short years. We think we've done quite a lot. So started the company in October 20 with Brittany's leadership. In April of 2021, we purchased 7,200 S19J Pro miners from Bitmain. Cointelegraph noticed that and actually noted that we were, based on their estimate, among the top 15 miners already based off of that purchase. Since then, we have grown, so we're very happy about that. Shortly after, in June, we signed a contract with CoinMint to originally get 23 megawatts. That's our carbon neutral or really renewable hydro-powered facility that's located in upstate New York, which we're very excited about. And then if we just skip forward, I'll point the group out to 2 key things. You'll see a cluster of months in 2022, and then near the end, you'll see a cluster of months in 2023. These were the months that we either outright or tied for the best Bitcoin efficiency performance relative to every publicly disclosing miner that we could find. We'll talk about it a little bit more later on, but Bitcoin efficiency is the recognized most important and most widely used metric to analyze the operational performance of any Bitcoin miner. And we're very proud to say that in 2/3 of our existence, we have been number one, either tied or outright. And I'm certainly going to dive into that a little bit later on. Lastly, as you can see on the far right-hand side of this, in February 9th of this year, we merged with a company called Akerna on the NASDAQ and changed the ticker over to GRYP, G-R-Y-P, so grab a grip on your Bitcoin. The point being is that when looking at our financial history, for anyone who looks at charts, please note that our history starts at February 9th, and because we have a merger, the previous company's history still exists prior to February 9th, but that has nothing to do with Gryphon. Gryphon really is post-February 9th, if you're looking at it from that perspective. So let's first talk about our power, because that's the key thing, and that's the 28 megawatts now that we have that's hydro-powered, located in upstate New York. So it's located first in an economic opportunity zone, which we're very happy to be. And this really combats the narrative that you sometimes see in the media of how the quote-unquote evil Bitcoin miners are taking power away from more justifiable uses. That really doesn't hold true for the industry, and especially for Gryphon, doesn't hold true at all. Reason being is that we're in an economic opportunity zone. So in fact, our existence in that area is actually justifying the economic deployment of power in the region. Reason being is that that location used to be a former Alcoa smelter. And for those of us who are familiar with smelting, those are very energy intensive businesses. As material for Alcoa kind of ran out, they moved most of their operations away, which left a very big demand gap that was there, especially with a lot of power infrastructure already built in. So in comes Bitcoin miners such as ourselves, we use up this power, but basically it also justifies the economic deployment of power for the whole region, because the region doesn't have much to begin with. Having us as an anchor tenant, so to speak, for power gives people lower cost power than what they probably would have gotten if we weren't there. So very happy to be part of that and helping in the region. The other interesting thing about what we're doing there is that we uniquely have a direct cost pass-through model with profit share. And so when you speak with most, or if you hear presentations for most other of my peers, they'll usually tell you that they have, 6-cent cost, 7-cent cost, 8-cent cost, somewhere in that range in terms of their power. We don't give you that number because ours fluctuates. And we did that on purpose. Based off of my prior experience when I was running Riot and other companies, when the down periods happen for Bitcoin, those 6-cent, 7-cent, 8-cent numbers tend to be ceilings after a point if Bitcoin prices go down too much. And you're actually really just covering 10 pots with 8 lids because you're basically not making enough money because you're locked into these power contracts. What we did instead was we designed a flexible shared pain, shared gain strategy. And so what happens is when things were going poorly, which happened, let's call it about a year and a half ago, we were enjoying costs as low as 3 to 4 cents per kilowatt hour because it flexed down. Now, what we did was we are trading it off. So when things are going well, which we're moving into now, we believe, we will be paying a little bit more than average. But what we have done is we have intentionally made the choice that we believe our investors care a heck of a lot more that we don't go bankrupt during down periods or suffer, as opposed to making every incremental penny when everyone's doing well anyway. And we think that's a very important thing to do. And because of that, our company can say that we have not had a single month of operationally cash flow negative performance. We've always been operationally cash flow positive because we've designed our cost structure to flex. And we're very proud of that. And so, as mentioned before, costs are $18,217 last year, among the lowest that we can observe among publicly listed miners. Right now, 28 megawatts, as I said, running about 9,000 machines. And as noted, the power sharing structure certainly helps. Now let's talk about cost, because that's really the most important thing. This is a commodity business. This is based off of January data, and I should update it, and I will do soon. But the idea and the measurements are pretty much the same. So let me first explain what we're looking at. What we're looking at here is what Cantor Fitzgerald, the investment bank, has done for a research piece. This was published in January. They have since updated it, but again, the data kind of works the same way. In that environment in January, Bitcoin prices were in the $40,000 range. And what they did was they took the publicly released data of all publicly listed miners and implied out what the post-halving costs to mine Bitcoin were for everyone based on what they could see. What you would see here is that based at the 47,000-ish level, most miners were either at break even or losing money post-halving in a $47,000 environment. What we did was we took our numbers, used Cantor's methodology, and implied it in. And that's where it shows that blue bar there, where it shows that we would be around 36,000, very comfortable under that 47, and definitely comfortable under the current 60 that we're seeing right now. So generally speaking, and what we're trying to explain here is that we are a low-cost operator. We've always operated that way. And relative to most, we are generating Bitcoin at a much lower cost, and we're very proud of that. Bitcoin efficiency, talked about it a few times. Let's really dive in. So as I mentioned, Bitcoin efficiency is the leading way of analyzing an operator. The math on this is very simple, just to understand. It is the number of Bitcoin generated over a period divided by the hash rate during that period. If people are familiar with oil and gas, the way to think about it is Bitcoin is oil, hash rate is an oil derrick. So of course, the more oil derricks you have, the more oil you expect to generate. And same way, the more hash rate you have, the more Bitcoin you should be generating. Now, in an environment where everyone has similar machines, which most of us do, you would think these numbers are fairly standard and they'd be similar. Unfortunately, it's not, and that is the reason why it is viewed. This metric is viewed as the number one way to look at the operational performance of a Bitcoin miner. And so let's look over at the table on the right-hand side. I'll show you two things to note. First, you'll see a lot of dark green. Those are the number of times that we've been outright number one, and that's 2/3 of our existence since we turned on our first machine in September 21. The other thing you'll notice is that you actually don't see a number below 3, except that one very annoying time, in my opinion, at the bottom where we were 4 because of some weird ties that happened above us. But we generally have been top 3 in Bitcoin efficiency and number 1 2/3 of the time. Why is that the case? People usually ask. It's frankly execution, in my opinion. Some of it's secret sauce, which we don't want to tell people because that's something you learn as you do. But other is more of a macro type of call, and I'll explain. A couple of years ago, Texas opened its doors wide open for Bitcoin mining, and we were very happy about it, very supportive. Many of my peers went to Texas because there were very attractive economics there. We didn't, and the reason was this: 2 reasons. First off, it is very, very hot in Texas. So if you're going to run an air-cooled machine, which most of us are, when it gets very hot, the machine shut down. You just can't help that. And we're very familiar with that because we helped run someone else's machines in Texas. And inevitably, during the summer, during the daytime, oftentimes they're shutting down because they're too hot. The other reason is that the Texas grid is a little weaker than most other grids. And so there are often situations where Bitcoin miners are asked to turn off their machines because power is needed elsewhere. And so it's all well and good to have hash rate deployed, but if it's not running because they're either overheating or because the utilities, the regulators are telling you to not use the power, it doesn't matter. Whereas we located ourselves in upstate New York, cooler environment, economic opportunity zones, so there's not much demand, and as such, our operating efficiency for that decision alone is significantly higher than everyone else because, frankly, our machines are running when theirs are not, and we're very proud of that. We'll talk a little bit about something that is notable. We did originally were planning on merging with another company prior to merging with Akerna. This company was called Sphere 3D. This occurred in 2021. While we were doing that, it certainly traded very well because it was a very hot market, and there were very good opportunities for us to also grow the business as we were trying to merge. So while we were going through the merger process, we were also able to raise capital and buy machines and deploy machines. Now, as many investors could probably relate to, investors tend to want to put their money into a public vehicle as opposed to the private one, which is what Gryphon was during that time. And so the money went into Sphere, was deployed under the Sphere banner. And we realized pretty quickly that if we did not merge with Sphere 3D, we would have basically helped them grow an entirely new business from nowhere for nothing. And so what we did was we negotiated this 22.5% management services agreement where Gryphon would enjoy the economics of anything blockchain related from now through 2026. Middle of 2026, of anything blockchain related that Sphere does in exchange for what we did up front. And so that was the original agreement. Unfortunately, Sphere is trying to terminate it. We disagree. And we believe that they have no grounds to do so, and we're currently in litigation for it. It's fairly advanced, but wanted to note that this does exist. It does not report to our financials, so our financials are clean from this. But we believe that there's about $30 million of value to us once a settlement occurs for this, however it occurs. But wanted to put this out there because it is there. It's pretty much a nice little upside on the operations that are already, in my opinion, top of class. The other key success factor, and actually I think, Brittany, you should probably talk a lot about this because this is really your baby for Energy Web and Carbon Chain. So if you don't mind, I'll hand it over to you.
Absolutely. So in 2021, we were invited to join a working group with Energy Web, BlackRock digital assets team, as well as RMI, in order to begin a discussion on creating the first independently verified certification for the sustainability of Bitcoin mining companies. This obviously in 2021 was in huge demand. I think all of you remember in Q1 2021 was when everyone from Elon Musk to Jack Dorsey to Kevin O'Leary started making the biggest deal and using all of their stage time and TV time to talk about the need for tracking and traceability and sustainability of the Bitcoin mining network. It was in Q2 where Tesla said that they would no longer be accepting Bitcoin as payment as a company until at least 50% of the Bitcoin mining network could be certified as sustainable. So this was a huge initiative in order to create the first sustainability certificate. What was really interesting to learn from the head of digital assets at BlackRock, Robbie Mitchnick, he said that over 70% of BlackRock's $8 trillion under management was ESG mandated funds. So in order for ESG mandated funds to flow into Bitcoin and Bitcoin touching companies, especially miners, this certification process would be the first step to making that possible. So Energy Web, which is a group of former energy industry executives that wanted to help prove the decarbonization and sustainability of the crypto industry, came in as the lead on this project. And we worked on this for over 2 years together in order to really, I would say, Rob and one of our colleagues, Chris Enzi, to take a lot of their technical advice on what was actually possible in terms of the tracking and traceability of data in the Bitcoin mining space. So how do you actually trace where machines have come from, where they're plugged in, how they're being utilized, of course, which mining pools that might go into, and therefore, how can you track if Bitcoins are actually green, or at least if companies themselves are making sustainable choices. And so this was a highly technical process with a ton of different auditing groups overseen by BlackRock and executed by Energy Web, so that all of the tracking and traceability of the energy data and the certification are actually now on the blockchain. So that was incredibly exciting. We were the first miner to go through this process. It was us and 4 other big mining companies. We're now a big advocate for this process because the more big Bitcoin mining companies that go through the certification and receive one, it means that large chunks of the Bitcoin network are actually being certified as sustainable. So we're getting close to the 50% as we take some of these other miners through the process. But we know that we actually got above and beyond the best score out of anyone that has been put through this test. So this is a really exciting initiative, the first of its kind, and definitely something that is changing initiatives in the industry and driving large institutional capital into Bitcoin mining itself and other Bitcoin touching companies. I think you've seen the enthusiasm from BlackRock and other large institutions. And of course, that followed directly after the release of this process last June.
Great. Thanks, Brittany.
Of course.
And one of my favorite tables is the gross profit sensitivity analysis. I invite the reader to pick what Bitcoin price you think we're going to average out for the year. I know a lot of people say we're going to be 100,000. So if that's your flavor, certainly look down this column. But anywhere within the reasonable range, I believe, is where we are. Hash rate right now is in the 500s, but it could be higher. But basically what this is showing is what our forecasted gross profit sensitivity is based off of whatever we view Bitcoin prices to be. So if we're right now in the current scenario, we're around 60,000, let's call it that our forecast is somewhere between 14 to 16 million in gross profit sensitivity. But if you do believe that we are going to be in a $100,000 world, which many of us do, we would probably be somewhere in the, call it 18 to $30 million in gross profits. And the reason why that's important is valuations. I believe I saw H.C. Wainwright put out a report where the average valuation they saw at the end of last year was around 16 to 17 times EV to EBITDA. EBITDA is basically very similar to gross profits. So if you're going to go 16 to 17 times these numbers, I would note that our net debt is only 11 million. So you multiply whatever number you think is right from this table by 16, 17, subtract 11, and that's what the market cap should look like based off of that type of analysis. Currently we're trading at, I call it 55 million market cap. So we do believe we're undervalued, and certainly think it's an opportunity for someone getting in on the ground floor of a Marathon and Riot, because we do have those teams in place. We have a great chair helping us with the ESG stuff mandate and making sure we're doing things the right way. And yeah, we're very happy to share that story. So that's the end of the presentation. Let's hop over to see if we have any questions or whatnot. I don't really see many, but certainly feel free to jump in with any questions. Brittany, if you have certain comments you want to share, certainly feel free to jump in as well. Yeah. Certainly feel free if you have anything to just type it into the group chat.
And I suppose while people might be thinking of their questions, I can add a little bit more color on some of our other ESG initiatives, which are quite exciting. As Rob mentioned last month, we were the first company to release all of our carbon emissions auditing data, which I think is incredibly exciting. There were many business leaders, some of the most famous people in the world, that have been calling for the industry to do this, yet no one else ever has. Through the massive call for Bitcoin to become more sustainable in 2021 and 2022, there were many companies that started to say they were mostly renewable or that they were carbon neutral. But as it turned out, in those companies that are publicly reporting, turns out that mostly means, at least 51%, not 100%, and that many of these companies were using offsets in order to achieve that goal. So for us to publish 2 years of carbon emissions assessments proving that we have no track 1 or track 2 emissions, and we're really only accounting for track 3, which includes everything from the creation of the ASICs through to the air freight or ships that they're coming over on, and then, of course, the retirement of those machines, which we haven't gotten to yet because we're still a young company, as well as corporate and executive travel. So that's really exciting on our side. And after we've finalized our first public company annual report in March, you'll be able to see on NASDAQ, on Yahoo, on many other of the trading and tracking websites for our stock, you'll be able to see our sustainability data, which no other companies in our industry actually have yet.
Very cool. I now noticed that I was looking at the wrong spot for questions, and I see them now. So let's start going through some of these. So I think Joseph has, could you elaborate on your comment on negative carbon emissions? How are you earning credits? So we were actually in a very fortunate position to know of a group that was in the early stages of generating their carbon credits, and they needed financing. And so we had the opportunity to give them some early financing that helped them out in exchange for very early access to their carbon credits, which we then received. So we effectively received those carbon credits for almost pennies in the dollar. It just so happens that during that time, I believe the Winklevoss twins were also announcing their carbon credit purchase, which was almost like a 10 to 1,000, actually, no, probably 100 to 1,000x more expensive than what we were paying for. And so we were very fortunate enough to have that opportunity. And because of that, we're sitting on a bank of carbon credits that we purchased really early that we will probably be using at some point when we need it in size. But that's how we have negative carbon emissions, so to speak, is that we are carbon neutral from scope 1 and scope 2, which is what most groups are looking at. So we're 0. And so by using these carbon offset credits, we're technically negative if you look at it from that perspective.
Yeah, to speak to those numbers, we possess 125,000 credits, and we would need to retire about 1,700 of them in order to be carbon negative.
There you go. So what is next? Because I'm just plowing through these. I'm just going to go in order as I see them. So Charles has, who do you see as your largest competitor? I look at it differently. It's not really a competitor, so to speak, because this is Bitcoin mining and you need to secure the network. So a lot of us are required. And so if XYZ company isn't there, there's definitely going to be someone else that's going to be there anyway. But if you want to say similar peers, in terms of operations, we were very similar to Marathon until they decided to own their own infrastructure. In terms of we did do an asset light, or we still are doing an asset light model where we don't own the operation. We use host providers, and what we do is we take the money that we receive and invest nearly 100% of it into revenue generating assets. So in terms of style, we're closest to Marathon, but would I see anyone really being a competitor? No, because if XYZ wasn't there, someone else would be there anyway. What's next here? Can you discuss valuation considerations of off-grid versus on-grid mining operations? It's interesting. It really depends on the availability of the power, and that's a location by location situation. So off-grid is certainly more standalone, so it potentially could be more expensive, but we haven't necessarily found that always to be the case. For us, it's really a question of consistency. if the power option there is going to be as close to 100% as possible, we're going to care. Otherwise, we're not even going to be really stepping into it. So I know some of my peers may be using things such as flare gas, which is only available 50, 60, 70% of the time. Solar, similar. We would probably shy away a little bit from that unless it's OnGrid, which would have support. But then you're also entertaining the fact that grid generally isn't fully carbon neutral. And so we have to consider that when we look at it as well, because we want to stay as close to 100%, if not entirely 100%, which we currently are and are certainly enjoying. What else there? Could you elaborate? Oh, you did that one. Daniel asked, institutions seem to have a strong demand for ESG Bitcoin. How much demand have you seen from individual consumers? If so, can you share signals you've seen? If not, how do you get them to care? Interesting. We've had some discussions with some groups that are interested in acquiring green specific Bitcoin. Because we were an emerging miner, we weren't generating quite as many Bitcoin that would probably satisfy, but I think we're now getting to the point where they're probably going to start wanting to buy it in bulk from us. We believe that there will eventually, if not currently, be a market where there's going to be a sustained premium for green Bitcoin, because some will certainly want a 100% carbon neutral, fully certified like we have Bitcoin, simply because that's the mandates that they have, and that's the belief systems that they have, and we certainly are there to support it. And so I wouldn't say it is a super large market, but there's definitely interest. As Brittany said, 70% or so of the BlackRock funds are ESG mandated, or at least have a portion to it. Some of them are going to be interested in this, and we're going to be looking forward to supplying into that market.
Yeah, I would say I've probably received inquiries from at least 25 to 30 groups about this. A lot of times, again, the demand is either too large or too small for us to undertake such a transaction. And now that we're getting to a larger size and scale, there are some really interesting opportunities like green mining ETFs that are interested in holding green Bitcoin as a part of their assets. And so there are incredible opportunities that are coming up that are only going to be given to companies like ours. So we're looking forward to seeing the development of that in this space.
And that's a great point. I'm not aware of many, if any, that are 100% certified. I don't think there is carbon neutral. So, exactly. So current monopoly, that's nice. Next question. Also, can you discuss Bitcoin hedging strategies using derivative versus hash price hedging mechanisms available? Certainly are available. We haven't been using them yet, but that's certainly something that we're going to be looking at. I would say that we would probably be more conservative. I don't want to end up being one of those hedge fund style companies where one bad mistake could blow up the entire company. So we don't want to do that. I would say that for Bitcoin exposure, we think we're probably going to do covered calls because we get the premium on the Bitcoins that we're holding and get a little bit of premium off of that. Maybe some zero cost collars to control the volatility. Don't really want to be caught with our pants down with Bitcoin plummeting if it ever does, and we don't believe it would, but it end up doing that. So we want to do stuff like that. I wouldn't necessarily go much more beyond that. Although one thing that we certainly pride ourselves at Gryphon is that we're always open-minded. So we'll always hear a story or hear an idea and then evaluate on its merits, as opposed to just being closed-minded and just say no. So anything's on the table, but we would prefer to be more conservative, simply because I don't think investors are giving us money to be fancy or cute with the Bitcoin pricing. They really just want us to be the best miner that we can be, and that's what we're focusing on. Mr. Anonymous or Ms. Anonymous says, what's Gryphon's stance on hydrocooling versus immersion cooling? What method do you use currently for your mining sites? So right now we're actually entirely air-cooled because that was the most cost-efficient way of doing it. We are looking at potentially using immersion, and probably will, especially if we go to hotter climates. For example, if we go to Texas, great chance we're going to go immersion, simply because we know that the heat will be an issue there. So that's an example, but anywhere, like if we go to Africa, for example, because there's lots of opportunities there. But currently we're entirely air-cooled. It is the most cost-efficient way of doing it, because at the end of the day, because we're a bunch of finance people at the top, it's really a math equation on what the best return for our investor dollars is. And so far, the math has worked out where it was better for us to invest nearly 100% of the capital we get into revenue generating machines, as opposed to splitting off 10, 15, 20% of it to buy immersion assets to keep the machines cooler, run hotter, but not have as much revenue generating capability because we're buying fewer machines. So it's always a decision that we make at any given time when we make the capital deployment decision. What is next? How would your approach differ from Argo? That would require me having very intimate knowledge of Argo's way of running things. I wouldn't pretend to say that I would know it that well, so I will punt on that question. But again, a worthy peer, that I'd like to say. Done that one. Mike asks, tapping into your commodities background, with total hash rate doubling in the past year and the halving complete, do you anticipate a business cycle correction in mining, or is mining more resilient to such cycles? I think that with the hash rate doubling, and one thing to note is we all knew this was coming. Every 4 years this comes, so we know every halving thereabouts from now to when the last Bitcoin's mined in approximately 2140. So that's a key thing. So any miner that's operating this business who is caught with their pants down, so to speak, I don't understand how that's possible, given that we know this was all going to come. And so with my commodities background in particular, I've always run this company as a very cost-efficient miner because that's how commodity companies succeed. If you look at gold, uranium, copper, anything like that, there is always those booms and bust cycles where there's going to be periods where you're making tons of money because the prices are high, or you're breaking even or losing money because prices are low. The only thing that a company can control, because they can't control a commodity price, is controlling their costs. So we run Gryphon extremely efficiently. We only have 3 employees, and we don't really spend on crazy things. We don't have big teams. We don't do big parties. You'll almost never see us, I believe, ever host a party at an event, because it's just I don't see the value in it. We'd rather do something else with it. I'd rather buy another machine, for example, at least for now. But that's the general thinking of how we would run the company. So I don't think the halving really makes much of an impact for those of us who are prepared. And I guess that's the other question, is some of us might not be, and we're going to find out really soon. I do believe there is going to be a bit of a reckoning that's occurring right now as Bitcoin prices start, Bitcoin rewards start normalizing, and the transaction fees that have been supporting some of the more expensive machines that occurred right after the halving are kind of dropping a little. And so those who have inefficient operations are going to have a tougher time and be forced to shut down. And those who are low cost like us will enjoy the difference. And last one so far, and please feel free if you have more questions to keep adding, but this is the last one I see. Are you looking into purchasing renewable energy certificates or other certifications as opposed to carbon offset credits? A lot of fraud in the latter. This is coming from someone in the energy industry. Good question. Right now, we're not doing any. We just so happened at the very beginning of our existence found a great opportunity, so we took advantage of it. Because we don't really have a need for it right now, we're not looking at it at all. We're keeping an eye on it, though. Brittany's always very good at maintaining this view. But right now, we're not actively looking at any. But yes, we are aware of the potential frauds and RECs versus other opportunities. And certainly, when we are going to look into the market to buy more, we'll aggressively see what the differences are. Brittany, I don't know if you have any comments on that, but feel free to jump in.
Yeah, I was going to say we've also done extensive research on different types of investments in the space that are not just the certificates or credits, in terms of carbon sequestration and carbon removal options. So I think as we grow, if we had the reason to do so, we could develop a diversified portfolio of these types of assets. But for now, we are lucky to say that we are not in need of them because we have made ESG friendly choices from the beginning.
Exactly. The best answer is to not need it at all.
Yeah.
Last question, at least right now. Can you cover again your balance sheet in terms of debt, any BTC and treasury, other liabilities, float? Great question. So we do have our financials that are already listed, and forgive me, I don't have it fully memorized, but roughly speaking, it's around 300 Bitcoin in debt, roughly. And I want to highlight that this is Bitcoin denominated debt, which we believe was a great move on our part, if I could pat ourselves on the back a little bit. What it did was, when Bitcoin prices in US dollar terms plummeted, many of our peers were upside down on their deals. Some had to declare bankruptcy, some had to sell off assets because they were no longer generating enough US dollars to cover their US dollar debt. Whereas because ours was denominated in Bitcoin, we were naturally hedged. Our production is in Bitcoin. So to us, we're always going to be giving our lender the exact same amount, regardless of what the price of US dollar or Bitcoin was. And so we didn't care. It certainly worked out very well in the down period. And that's the reason why we haven't had a single month where we were not operationally cash flow positive. But that's what we have there. In terms of other liabilities, no, we're very light. Float, 38.7 million shares are outstanding. There are a key 4 or 5 of us who own about 9% each. And because we're reporting shareholders, that's kind of well, as CEO, I can't really sell the shares anyway. But for the others, they're reporting shareholders. So the need to have to file every time you sell is kind of a natural deterrent to be too flippant in selling. And so I would say that the float would probably be closer to 50, 60, maybe 40%, somewhere in that range, depending on how many people are holders that don't have any interest in selling at all. But that's what it generally looks like there. More questions. So thank you. David, how is Gryphon positioned if AI computing power competes with mining power? Seems this is the big headline and challenge for publicly traded large miners. Yes, it is true that AI is probably going to end up using a lot more power than Bitcoin mining, given the growth that it has and the voracious appetite that AI needs. The difference, though, it is a different business model. A data center who is servicing a Bitcoin miner is not really the same that would service an AI operation, because the levels of quality of the operation is different. Bitcoin mining machines are very resilient, so you could feasibly just stick it in an empty warehouse that is relatively dusty and you're okay. AI machines cannot survive in that environment. So anyone who is using who is going to be considering Bitcoin mining versus AI would have to make a conscious decision to allocate a heck of a lot of capex to build a more higher level data center. So there is competition from that standpoint. Whoever is making this decision of whether we're doing A or B needs to make that capex decision as well. And so we are seeing competition, I think is probably the best word for relative to AI, and we believe that will probably still increase. But it is a different thing. It's steak versus burgers in terms of the costs involved in doing these things. And again, last question for now: what's the bear case here other than BTC falling? Regulators. I think that's the key thing, and that's one of the key reasons why Brittany is with us. Is I think regulation is probably the greatest risk to Bitcoin mining. I like to think that the cat is already in the bag, or the train's left. Whatever, pick whatever meme you want or phrase you want. I don't think a government is in any position to kill Bitcoin anymore. I think that's long past. It's too accepted at this point. But what I would call ham-fisted regulation that's trying to put a square current financial system peg into a blockchain circle is the problem, where they just take something from the financial industry and just try to apply it to Bitcoin mining. That can't work, and so we need thoughtful regulation, and that's why we have great people like Brittany helping us and giving us a seat at the table in the conversation. And I'm sure you have something to say about this, Brittany, so please jump in.
Yeah, absolutely. So I really felt, I suppose, compelled to start a Bitcoin mining company in 2020 because I felt like we had already achieved global regulatory clarity on Bitcoin, that enough jurisdictions around the world and most of the, I would say that the companies that lead the world in regulatory initiatives had already decided on Bitcoin, and especially the US being the main place that drives a lot of issues, I suppose, in the digital asset industry. The US had found clarity from the SEC and from the IRS. Bitcoin is a commodity and a property. And so now that we have those as decisions and as rules, Bitcoin doesn't have any issues. Of course, there's a lot of companies in this space that have diversified into other crypto assets. And certainly they are at risk, but we have decided not to do so, specifically to be risk averse and help us get onto the NASDAQ approved by the SEC as quickly as possible.
Great. And thus far, that is the end of questions. So we can wait a few moments to see if there are any more. Otherwise, thanks everyone for their time. But let's give us a few seconds to see if there's any more. Oh, there's another one. Can you share a presentation? GryphonDigitalMining.com. We'll always have our presentation, so feel free to go there, and certainly it's there. If not, certainly contact us, but I'd be surprised if it's not there. We're required to always have it there, quite frankly, so it's there. Any other questions?
Well, great.
Oh,
thank you
and
guys
thank you
so much.
Thank you. Well, thanks everyone. Oh, there's a bunch just popped in. Are you doing anything in Mexico, Latin America? As we say, always open-minded to any opportunity. So if there is one there, we'd love to take a look. I am hoping by the question you have one. So if you do, let us know, and we'll be happy to take a look, because we are always looking. Been doing this since 2018. We've always kept a roster of available projects on hand. And so if there's anything new, love to look, because that's 80% of what we do right now. Joseph again, can you elaborate the links with EWT? Are you linked in any way to the successes of their project? That's probably more of a Brittany question.
Yeah, that's Energy Web token. Energy Web has been our partner in the creation of this third-party sustainability certificate. We came on as a technical advisor, and our sustainability certificate is minted and lives on EWT. So while we have used that blockchain and been a technical advisor on their project, we don't have any holdings of EWT. We don't we're not currently collaborating on any further initiatives. And I would say we constantly promote the project because it is such a big deal and a landmark project within the digital asset and sustainability space. But we don't have any other relationship with them at the moment.
Oh, well, thank you. I'll read it out loud from Chantel. Not a question, just wanted to say you're both fantastic speakers. Very informative. Thank you. Thank you very much. That's flattering.
Yeah,
Brittany's
thank you
really,
for being here and giving us your time.
and thank you, Joseph. Thanks for your questions, Joseph. Much appreciated. So unless there's any more, happy to wait a few more seconds, but if there are no more, thanks everyone very much for their time. This was extremely enjoyable. Love to do it again in the future.
And if you want to learn more, follow us at Gryphon Mining. We're at Gryphon Mining on Twitter, right? Yes.
On Twitter.
Okay. Just double checking. You can find updates on our website as well. We have a section that we constantly update press or any documentation or filings, so you can follow us there. But of course, we try to inform the public as soon as we are able on our Twitter account on a daily basis.
Fantastic. And I think we'll leave it there. Thanks everyone very much for their time, and have a good rest of the day. Mike, you're jumping in?
Yeah, just want to say thank you for a great webinar. Happy hosting you guys, and see you guys soon. Bye, everybody.
Thank you. Bye.
Wonderful. Thank you, Mike. Thank you, everybody.